So I won't ask the numbers, but sometime I wouldn't mind.
Well, usually the live viewing, we have a couple 100,000, and then so I promised Mary Kay I'd provide a little comic relief there at the beginning or at the end. So,
Okay, we are now live on YouTube, Mr. Chair.
So I guess, Mr. Chair or Director Corey,
Yes.
you'll call the meeting to order.
I will. I was just waiting to have you tell me to start doing that job or to do something else. So
You're doing a great job.
so it's fairly easy so far. So we call the meeting to order. The first item is the approval of the agenda. We have a motion to approve the agenda.
So moved.
We have a seconder.
I'll second it.
Okay. It's been moved and seconded. The agenda be approved. Further question? All in favor? Motion carried. I guess. Did I hear any nays in there? Okay. And conflict of interest. Any declaration of conflict of interest? None. The first item on the agenda then is the staff report. Post-closure review, first quarter, Don Fitzgerald and Tony Spares.
And I'm going to actually take Don's place because he was unable to make this meeting today. But I do want to introduce you to Tony Spares and Colin Spares. They're with Scotia McLeod. They are our investment advisors, and they'll provide more of an update. So the post-closure investments are used for when the landfill closes. So any expenses that are incurred then, we're required to set aside money and invest it so that we have those funds available for those expenses when the time comes. We do have an investment policy statement, and it specifies what our asset mix range should be. So you can see in the first table in the report that Don prepared, cash and cash equivalents, we are allowed to have a percentage of 0 to 10% of our fund in that. At the end of March, we had 2.33, so we're in compliance there. Fixed income is 10 to 30% of our portfolio, and we were at 18.8%. And equities permitted between 65 and 85%, and we were at 78.87. So we were in compliance with our investment policy statement. And then on the next page, we can see that for the first quarter, we had growth of 5.84%, which is good because we did have a reduction in 2022 of about 632,000 non-realized loss. So it was nice to see it come back a little bit by about 286,000. And I'll turn it over to Tony and he can provide more of the details with regard to the investments.
That's great, Mary Kay. Yeah, as Mary Kay indicated, first quarter we're up about 5.84%, which represents 286,000. And the loss last year we were showing at around 10.32%. So we're picked up, almost half kind of on the way back. This really has happened kind of quietly and quickly, not just for the portfolio that we manage here for you, but in general, everybody's portfolio, I think, has increased in the first quarter, and it's nice to see it and feel it. But it happened, like I say, with no big fanfare, regardless of the fact that there was, a couple of hiccups along the way. One of the big ones was, sorry about that. One of the big ones was the SVB Bank, or the Silicon Valley Bank in the U.S., kind of caused a little bit of stress here in February, and that kind of smoothed itself out. We also are still seeing continued interest rate increases, especially out of the U.S. That maybe we're probably are anticipating maybe one more here for 0.25%. And so, the fact that the first quarter gave us that kind of strong performance, it kind of gives us strong credibility to the fact of kind of staying invested for the long term, which this portfolio is managed for, and not trying to time the market, because a lot of people, after seeing last year in December, the kind of the gut wrenching kind of down like it was, the thought process of pulling out of the market and waiting for it to get better before you kind of move back in, you would have missed a pretty strong first 3 months of the year. The economy seems to have reached its peak kind of as far as what's going on, and there's now kind of a wait and see attitude as to where things go from here, i.e., is there going to be a recession, and if so, how deep? The consensus is really, at the moment at least, a soft, short recession. The next Fed meeting in the U.S., they do expect another 0.25% rate increase, but that's really probably going to be the last rate increase. And so, that coupled with still a few stress as a kind of a result of the SVB bank is still playing a factor on kind of a little bit of the volatility that's going on. But really, inflation has come down considerably, also, though it's still higher than kind of the 2% range that everybody likes to see, which is the norm, so to speak. So again, depending upon the future of what's going on as far as inflation, if it continues on its kind of path downward, then we would probably no longer see kind of rate increases, and we'll start to see them kind of flatten out, maybe start in the downward trend, which is going to be positive for, not just the bond markets, but also the stock market. So in general, we're remain very optimistic that the worst is behind us, and that we expect continued growth going forward, although not as quick as we have seen in the first quarter, but probably, or nobody likes to forecast, but my feeling is that we'll probably see, over the next, 3 quarters, or by the final end of this year, maybe somewhere around the same kind of growth that we've seen in the first 3 months. Portfolio itself remains, like Mary Kay has indicated, within the allocation constraints, and we do make changes depending upon what we do see happening. Although at the moment, we're content and happy to remain where we are. That was kind of a short and quick kind of recap. Definitely open for any questions, see what we can do and try and answer them.
Any questions for Tony? Okay. We then, I guess, we'll move to a motion to receive the post-closure review first quarter report.
So moved.
Is seconder, please.
Second.
Ready for the question? All in favor?
Aye.
Aye.
Motion carried. Thank you, Tony.
That's great. We'll leave you guys to continue the meeting, and have a good afternoon.
Thank you.
Thank you.
Thanks, Colin.
So we move on to the first quarter operating results. Mary Kay.
Thank you. I'm just going to take a second here and share my screen with you all. All right, can everybody see that okay?
Yes.
Perfect. All right, and I've got my trusty spotlight. That'll help me stay on track and you can follow me around. So these statements that we're going to review, I just want to remind everybody, they're prepared under New Brunswick Municipal Financial Reporting Standards. That's how we prepare our budget, and it's how we prepare our monthly financial statements. It's a different set of standards than the audited statements that you saw a few weeks back, which are prepared under PSAP. Just means there's a different set of rules, things that we're allowed to expense, not allowed, depending on the standard. So I'll go over a little bit of that as we go through, just to kind of highlight some of the differences for you. So we'll start with the balance sheet. So the balance sheet shows the assets, liabilities, and equity of the commission as at March 31st. So it's just a period in time and a capture of the snapshot at that point. So starting with our current assets, we had cash at the end of March of 1.2 million. That was down from 2 million in the previous month. So as of the end of February, we had 2 million. There's a couple of reasons for that decrease. The first is we had borrowed 500,000 from our capital reserve fund. You can see down here, this 500,000. We had borrowed that at the beginning of the year because we did have a little bit of a cash crunch until the money from the various communities started flowing in. We had more outflows than we had inflows. So just to get us by, we borrowed temporarily. We repaid that in March. So you can see that that went away. We also paid about 330,000 for our second engine block swap. So in 2022, we did a block swap on our first engine for our power generation. And in 2023, we're doing it on the second engine. So that's begun, and that's part of the cost contributing to the decrease in cash. Accounts receivable is money that people owe us. And at the end of March, it was 2.5 million. Included in that is 1.4 million that we're going to be receiving from the Municipal Capital Finance Corporation for debentures. So we have money that's going to come to us because we're going to get new loans. So that's 1.4 million. We also have 147,000 in an HST receivable. And then the remaining amount is just regular operating receivables. Vast majority of those are at the landfill because that's where the majority of the business is relating to those receivables. For inventory, this consists of recycling product that we sell on the market. And we don't adjust this on a monthly basis. We just adjust it at the end of the year. It's very small. So you'll just see that stay consistent month to month. And then in December, we adjust it to what the net realizable value of that inventory is that's sitting there. Prepaid expenses, they consist of amounts that we've paid ahead of time that's going to benefit us over a period of time. So what's included in there is our annual insurance premiums as well as our WorkSafe premiums. So we record them as prepaid expenses and then we expense them over the months as we use them. So those total 388,000. So our total current assets as at March 31st were just under 4.2 million, down slightly from the 4.5 at the end of February. Non-current assets are assets that aren't considered liquid, so it would take a lot to sell them and realize cash. So we had capital assets of 12,325,000. So the way we go about capital assets is we just adjust them on a semi-annual basis. So any capital assets purchased from January to June, we'll record them at the end of June. And then from July to December, we record them in December. And we don't book amortization under this standard. That's only booked under PSAP. So you will not see amortization go through these monthly financial statements. We had a small bond discount, which is going to go away this year, of $747. Our post-closing fund, which we just talked about with Tony, that's our investments. And that sat at $4,979,000. We do not adjust our investments to fair market value until we go to PSAP. So what you see every month is just the cost. So what's been contributed or what we've actually earned. It is not the market value that they actually are worth at this point in time. We have 112,000 in a trust fund. And the trust fund was established to cover cleanup costs, which may be required to support our elm tree tenant obligation to remediate leased land. So Elm Tree is a tenant at our landfill site. They do soil remediation and they were required to put some money aside in a trust in case there are costs associated with remediating that soil. So we have 112,000 sitting in a bank account. And we also have a liability because we don't have the ability to spend it. It's for a specific purpose. So that's what that amount is. We have some money in reserve funds. We have a capital reserve fund of 2.1 million and an operating reserve of 419,000. We cannot make a withdrawal or put money in a reserve fund without board motion. So that's something that we typically look at in December to see if we need to take money in or put money in or take money out of those reserve funds. So that leaves us with total non-current assets of 19,939,000. Adding the current and the non-current together, we had come up with total assets of 24,136,000, down slightly from the previous month. So on to the liabilities and equity side, we have accounts payable or obligations to pay other parties of just over 1 million. That's up from 632,000 in the previous month. And the main reason for that increase is we do have payable of 363,000 for tourism to the city of Fredericton. So that's owed and that's in there. For deferred revenue, this is revenue that, or this is cash that we've received, but we haven't actually performed the services in order to recognize the revenue. So you're going to see this one jump around a lot depending on where we are in our calendar year, because we do bill the communities on a quarterly basis. So at the first of the quarter, we get paid for 3 quarters, but we only recognize that revenue on a monthly basis. So it will be high at the beginning of the quarter, lower at the end of the quarter, and that's to be expected. We talked about the due to capital reserve, which we paid back. And then we have some accrued debt servicing, which is the expensing of our debt payments. So we expense them on a monthly basis. That gives us total current liabilities of 1,623,000, which is down from the 1.9 million in the previous month. For long-term liabilities, we have some bonds payable to the Municipal Capital Finance Corporation of 1,938,000. We have a retirement allowance payable, which is an actuary calculated amount for staff that are eligible when they retire, and that's 644,000. We have the liability for the post-closing costs. So we have the investments that are going to pay for it, and the liability is the obligation that we have. That totals 5,497,000, and that's determined by the engineers. And then we have that liability for the Elm Tree Trust, which we talked about. So our total long-term liabilities are 8,192,000. Then we have equity, which consists of our investment in capital assets. And basically that's our unencumbered assets. So capital assets less what we owe on them gives us the 10,387,000. We have our reserve funds. So we have the cash above and the liability below. And then our accumulated surplus, this is the operating accumulated surplus since the commission's been in operation, of 1,410,000, giving our equity total at 14,319,000. When you add the liabilities and the equity together, you come up with the balance number of 24,136,000. Any questions on the balance sheet before I move on? I will tell you, I don't usually go in that much detail when we review these on a quarterly basis, but I did want to explain what everything was where it is our first meeting together. So that brings us to the income statement. Now for the income statement, each of our different funds or our divisions is presented separately under municipal standards. So you're going to see in the capital letters, that's the various funds that we have. And then the items that we present, we have our budget for the year. So that's the annual budget. We take that annual budget and we allocate it out monthly. So what we do is we take historical costs over the last 3 to 5 years, depending, and we see, okay, what percentage do we receive or spend in January? And that percentage gets allocated to January's budget. And we do that for the entire year. So that budget amount will tend to fluctuate depending on what we have done historically. We have the actual, which is what actually happened in March. We have our budget year to date. So that would be what we had budgeted for January to March. We have our actuals, what actually happened for January to March. And then we have our variance column. And what that means, if it's a favorable variance, meaning it's good, so revenues were higher or expenses were lower than what we had budgeted, it's going to be a positive number. If it's an unfavorable variance, it's going to be a negative number. So if revenues were under what we budgeted, or if expenses ran high, you're going to see it as a negative number. So just kind of keep that in mind as we go through. And what I really want to focus on is the actual year to dates. We did have a lot of, I would say, when we were doing our new funds, it took a lot of back and forth to get them set up the way they wanted. So you're gonna see a couple of adjustments go through in the March numbers. And it was just to correct things and get them set up so that going forward, we're recording on an accurate basis. So the first fund that we'll start with is the Regional Planning Services Fund. So we had revenue, member fees, which is what the communities pay us, of $36,650. We had other revenue, which is revenue that we received with regard to our pool project of $5,300. And then we had our second previous year surplus, which we're required to bring under municipal standards of $26,000. So overall revenue for the first quarter is $68,000, and that's about $5,000 higher than what was budgeted for the same time period. So that's a favorable variance. On the expense side of things, we had administrative expenses, again relating to the pool project, of $5,300. And we had corporate expense allocation of $38,000. So our total expenses for the first quarter were $43,806, which was about $205 over what we had budgeted for the same time period. That gives us, when we take our revenues minus expenses, a surplus for that time period of $24,000, which was about $5,000 higher than when we had budgeted. So overall, very favorable for regional planning. Our local planning services, we had revenues for the first quarter of $445,000. We had some other planning revenue of $1,000, giving us $446,000. So we were slightly under what we had budgeted, but very small. On the expense side of things, we had operating expenses of $302,000. That was about $68,000 less, less than what we had budgeted. And the main driving force there is salaries and benefits. We did have 3 vacant positions from what we had budgeted, so it resulted in some savings in the first quarter. We had planning advisory services of $3,300. That was less than what we had budgeted for the same time period. We had capital expenses, which were right around budget of $1,170. We had corporate expense allocation of $54,000, and then we had a second previous year deficit that we brought in of $57,57. So total expenses for the first quarter came in at $366,000, which was $71,000 less than what we had budgeted. That revenues minus expenses gave us a surplus of just under $80,000, which was $70,000 better off than what we had budgeted for the same time period. The main driving force there being the savings in salaries and benefits. So that brings us to the Solid Waste Services Fund. And again, focusing on our actual year-to-date column, we had revenues for the landfill of $1,916,000, which was $56,000 higher than what we had budgeted. And the main reason for that increase is increase in tonnage. So we were about 1,000 tons higher for the first 3 months than the previous 3 years. So that resulted in an additional $109,000 in revenue. And we had other sources of revenue that were actually under budget. So the majority of the increase is due to tonnage, but our ash, we have an ash pit that we take ash from the University of New Brunswick. And that was actually $45,000 less than what we had budgeted because their facility is actually down for improvement. So we're not receiving ash at this point. So we're not getting the revenue for that. Our other landfill revenue for the first quarter was $88,000, and that was $71,000 higher than what we had budgeted. And the reason for that one is Elm Tree had a big project where they brought in soil. So we receive amount per ton when they bring in soil. So that drove up the revenue for other landfill. We had our second previous year surplus, which came in at $657,000, which gave us revenues for the first quarter of $2,662,000, which was $127,000 higher than what we had budgeted. So again, very good news on the revenue side. For the expenses, we had operating expenses of $1,347,000, which was 140,000 less than what we had budgeted. We're seeing savings in our salaries and benefits for the landfill. We do have a couple positions that are open there. And then the other one is just a timing difference. We typically do a baler refit in March, but that hasn't been done yet. So it will come later in the year and it will eliminate some of those savings that you're seeing. We had debt servicing costs of just under 200,000. Post-closing costs, we talked about that at the board meeting when I presented the post-closure review. But with the result of the approved EIA, the amount that we have to contribute to our post-closing fund went down significantly. So we had budgeted 76,000, we only had to contribute 2,000. So that's resulted in a savings of about 74,000. We had capital expenditures of 7,500, and that's down about 42,000. That's just a timing thing. We are still planning to do all of the capital items that we had budgeted. So you will see that variance eliminated over the coming months. And then we had 103,000 from the corporate service allocation. So total expenses are 1,660,000, leaving a surplus in the landfill of just over 1 million, which is about 374,000 higher than what we had budgeted. Again, the result of additional revenue and less expenses, some of which are timing and I expect to be eliminated over the coming months. On the recycle side, we had revenue of 90,000, which is actually about 38,000 less than what was budgeted. There's a couple of things that are contributing there. The first is there's a softening in the commodity prices. So we're not getting the amount that we had in previous years. The second thing is there's a timing difference. So we had budgeted to have a sale of scrap metal happen in March. It didn't happen, but it will come in the coming months. And you'll see a little bit of that variance reduced. On the expense side of things, we had expenses of 370,000, which was 23,000 less than what was budgeted. And we had debt servicing of 7,000. So total expenses, 377,000, which is about 23,000 less than what was budgeted. So that has actually resulted in a deficit for recycling, and we always expect a deficit in recycling of 286,000, which was actually higher than what we had budgeted by about 15,000. So adding the landfill and the recycling together, because they are one fund, gives us a surplus for solid waste of 715,000 for the first quarter, which is about 359,000 higher than what we had budgeted. So again, great news. That brings us to our electricity generation facility fund, which is our power generation facility. So we sell our energy to NV Power. And for the first quarter, we had revenues of 306,000, which was actually about 78,000 higher than what we had budgeted. It was a great first quarter. There's two things that really impact our revenue, is gas flow and whether our engines are running. And both of those were very successful in the first quarter. So that resulted in higher revenue, which was great to see. On the expense side of things, our operating expenses were about 50,000 higher than what we had budgeted. They came in at 145,000. And the main reason for that increase is repairs and maintenance on that second engine that is going to be retrofitted in the current year. We had debt servicing of 152,000. Our corporate service allocation of 5,800, 970 was our second previous year deficit coming in, giving us total expenses of 305,000, which again was about 50,000 higher than what we had budgeted. But because we did have additional revenues, we were able to actually realize a small surplus for the quarter when we had actually budgeted to be in a deficit position. So we were almost 27,000 better off than what the budget had called for. So that brings us to our new funds. The first one being regional tourism promotion. So for the first quarter, we had member charges, which is what the communities pay us, of 262,000. We had the CRSC grant, which is just under 110,000, for a total revenue of 372,000. On the expense side of things, we had $363,000, which is our contract that we pay to the city. You will see that that full amount went through in March. We noticed in March that we had not been billed. So that's actually January, February, and March's amount coming in. Whereas in the future, you're just going to see 1 month come in at a time. So that's why you're seeing a large deficit here. You shouldn't see that going. And then we have our corporate service expense allocation of $10,000, leaving us with a deficit in regional tourism of $774. We actually had expected to have a deficit of $790, so we were $16 better off than we thought we would be. Similar results for economic development. All of these funds where we pay a firm to provide the services, there's not much going on there. You know your expenses, you know your revenues, so it's pretty straightforward. So for economic development, the communities paid us $253,000. We have the CRSC grant of $105,000, giving revenue of $359,000. On the expense side of things, again, something similar happened. We had to pay 1 month ahead to Ignite. So in order to get us just to have 3 months worth of expenses, we did record an adjustment in March of $116,000. So you shouldn't see that going forward. You should just see 1 month's worth of expenses. And that gives us $350,000 for the first quarter's expenses. We had our corporate service expense allocation, and that gives us the deficit for the quarter of $773. Again, $16 better off than what we had budgeted to be. For community development, we had member charges of $15,000. The RSC, there's community development grants of $60,000. So that includes the RSC grant, as well as ESIC gave us grants in which we could pay out to different organizations. So that's included in there as well. On our expenses, we had operating expenses of $21,000. The $35,000 are the grants that were paid out to various organizations. And then we had our corporate service expense allocation of $10,000. So that resulted in a surplus for community development of $9,700, which was $10,500 better off than what we had budgeted for the quarter. For regional transportation services, we received $34,000 from the members, just under $15,000 from the province, giving total revenue of $49,000. There's one amount that I do want to point out here. There is an error here. There's $29,000 that got recorded here, and it should be for the regional strategy. So that's something that I'm going to fix in April going forward. So this amount actually should be much less. Meaning that the actual surplus for regional transportation is much higher by about $30,000. And the reason is we really haven't taken off doing regional transportation just yet. So those expenses will come later in the year. Public safety, we had revenue of $1,000 from the members. We had the grant of $448,000, giving total revenue of $1,500. We didn't have any expenses for public safety just yet, but we did have a corporate service allocation of $967, leaving a surplus in public safety of $551,000, which is about $590,000 better off than what we had budgeted. And then the last one is sport, recreation, and cultural infrastructure. We had revenues of $3,500 from the members, the grant from the province of $1,474, giving revenue of $5,000. We didn't have any expenses, so that left the surplus of $5,000, and which was $5,000 higher than what was budgeted. And then if you add all of those funds up, you come up with what the consolidated surplus was. So for the first quarter, we had budgeted to have a surplus of $356,000. We actually had a surplus of $840,000, which is $483,000 higher than what we had budgeted. So overall, it was a very successful first quarter financially. All of our funds outperformed their budget, which was great. The next couple of quarters are actually our busy time, both for planning as well as the landfill. So we can expect expenses to increase over that period of time. And we'll see what that brings. So I'm just going to take a minute and I'm going to go through the various schedules that and information that we do present to you, just to kind of give you an idea of what you're looking at. It's not something that I do most meetings, but it's kind of nice to explain it so you can know what information you're receiving. So power generation, this is a schedule of the kilowatt hours that we produce, and we give you historical reference so you can kind of see where the engines are compared to where we were the last couple of years. So you can see that for 2023, actually in each month, January, February, and March, we have outperformed our production over the last couple of years. So that's great news, and we hope that trend continues. This is a summary of the tonnage that we receive. And if you're interested in how much your community brings into the landfill, you should be able to find your name here, and you can see how much tonnage comes in on a given month. So a lot of communities find this very helpful, and it's good information for them. The one exception is Harvey, which Director Corey and I talked about yesterday, but hopefully we can rectify that at some point. We also have the historical tonnage for our construction and demolition. And you can see how much comes in per month for that. And we are seeing slightly a downward trend for construction and demolition, which is interesting. Here we see historically what is coming in. So you can see in a given month, January for this year was much higher than normal. It was average for February. And again, we're about in the middle for March. But overall, we are slightly higher in 2023 than we were in 2022 and 2021 as well. So garbage is trending upwards. This is good information to have, and it just shows the breakdown between the source of where our garbage comes from. So municipalities, they make up about 42% of our tonnage, and ICI, and that stands for industrial, commercial, and institutional. They represent about 58% of the tonnage that we receive here at the landfill. So it's just something to keep in mind, and that it fluctuates slightly, but it's usually around those percentages. This is information with regard to recycling. So you can find the larger municipalities are all tracked separately. Those smaller municipalities that are part of our region-wide recycling, they're included in this region-wide recycling figure here. So you can see how many tons are recycled in a given month, depending on which source you're looking at. And then again, this is just to give you an idea of where we are. Recycling is probably down slightly in the last couple of years, and this just shows you the picture of that. So going forward, you're going to receive this package from us on a monthly basis. And if you have any questions, feel free to reach out to me and I'd be happy to answer those for you. The Finance Committee does meet on a quarterly basis. So we meet in April, July, and October to review the financials quarterly. And then we meet in August. We'll review the budget at that point. And we have a meeting for reserve fund transfer approval in December. And then it's just as needed. The year-end statements that are prepared are the responsibility of the audit committee. So we usually take these financials in January and we convert them to PSAB. So those don't usually get presented to the finance committee. I see Director Fox has his hand up.
Yeah, I've got three questions, and I'm going to go backwards because it's in your slides. So we can go back through them. In the detailed garbage historical tonnage for 2023, that detailed listing.
Mm-hmm.
I'm just curious, what is CRRD? The third one down.
Those would be the rural districts.
Okay. All of them combined.
Yes, yeah.
Right, okay. Okay, next one. The next one I had, okay, for regional transportation services, What will those expenses look like? Like what services will we be paying for in that when that gets moving along, I guess?
Yeah, that'll really depend on what the board approves. Like if you have a third-party service provider that's going to provide that service, then it could be a contract.
Okay.
At this point, until the board approves that service, we're not sure. Right now, the expenses consist of a consultant to provide those recommendations.
So I assume that when the Regional Transportation Committee gets going, that they may bring recommendations to the board for projects and things like that. Is that correct?
I'll let you answer that, John.
Yeah, so thank you, Director Fox and Mary Kay. Yes, so right now we're looking at what the regional transportation structure will look like. Then once that goes, it'll go through the community development committee. Within that, Brett McRae is leading. He's going to be the senior support person for the regional transportation. And a lot of that work's being undertaken right now as part of our regional strategic planning.
Sure.
And so we're doing that now, and that will evolve over the next few months into coming back with recommendations to the committee and to the board.
Okay, perfect. No, that I'm just curious as to what that might look like.
Yeah.
On the previous page, under economic development, for the $350,000 that we look at in all of the rest of the statements, I can kind of put my hands on some really tangible goods or services that we've paid for. What have we received for the $350,000 that we've put out for economic development at this point? Because the only thing I've seen is a PowerPoint presentation on direction that we may be heading in. So I'm just curious as to what tangible goods or services have we received for the money that we've put out in the first quarter.
Mary Kay, you want me to take that as well? Or?
Yes, please.
Thank you again, Director Fox. In terms of that, the first 3 months of the MOU that was signed, and I believe everybody has a copy of the MOU. It was shared with all the municipality or all the communities and entities. If you don't, I can certainly share that with you ASAP, and or right after the meeting. And so in the first 3 months, it was to develop a plan moving forward, to start to set the brand. If you go on to the Ignite website now, you'll notice that all of the communities are represented in terms of the Capital Region Service Commission. And then it was to start commence in terms of the hiring to staff up to be able to hit the ground running once the plan was approved with the KPIs and the process moving forward. So that was the first 4 months. They would have, I'm sure, within that funding, not all of that would be expenses. They would probably have some funding there that they will now start entering into doing activities in the communities. Some of those activities to date have included job fairs, attraction and retention and recruitment pieces. They have an announcement, I believe, today with a tech company that they're announcing as well in the region, and that they've been invited to as part with ONB. So they've been out building those partnerships. I meet with them every 2 weeks, Director Fox, if there's any updates that you would like to get, and anyone on the committee would like to have, or the board. And we can certainly share that information of the list of activities undertaken to date if you'd like that.
Yeah, no, that would be great. Like I say, we met with them once, I think in January, and we've not heard boo since. So
okay. Now, it doesn't and I'm not trying to defend anyone or play devil's advocate here, just so that you know, a lot of times when and I've had a couple of conversations in other communities or entities, had that same or similar feeling. And when I reached out to Ignite, they had actually been working with businesses and or companies or organizations within the area. So I'll certainly ask them what's been undertaken.
Yeah, perfect, thanks. That's the end of my 3 questions. This is a really good presentation, Mary Kay, on the finances. I like how you went through that.
Thank you.
Any other questions for Mary Kay? If not, then I believe you would need a motion to receive the first quarter operating results.
Yes.
Can we have a motion to receive the first quarter operating results, please?
I'll motion.
Moved. Seconder,
I think you had 2 there,
Yeah.
Mr. Chair. You had 2 at the same time, so
oh. Moved and seconded that.
flip a coin.
First quarter operating results be received. Ready for the question? All in favor?
Right.
Aye.
Motion carried. Thank you. Yeah, Tim, I wasn't planning on doing this at breakfast. So now we're moving on to, I did have a comment, I guess, about the presentation. Thank you, Mary Kay. As Tim said, it was very well done, very informative, and it's a learning curve for all of us as we're going through this. So thank you for supporting that. It does strike me that some of the areas that we are not able to get much traction in this year will be challenges for us as we move into the initial budget deliberations in August. And that's mostly in the new areas. So I think there's going to be some ongoing challenges there to establish or identify an effective budget there. But we'll deal with that when we get there, I guess. General discussion and directions to staff. So what it's just, John, is that over to you, I guess?
If there's anything further, if you have any further discussion or direction from the Finance Committee point of view, if there's anything such as we talked about with Director Fox, getting some information on the activities of Ignite in the region over the last few months and reporting back to the committee, and anything further that you may have as direction in terms of that, or if there's any other discussion point that you would like to raise.
I would find it very valuable if we had a, like when I look at the historical garbage tonnage and I look at the names of who's disposing of what, it's hard for me to compare my area to another area if I don't understand the population base in Arcadia, say, or some other place. So when I use this information to my council, I would be trying to point out the fact that we're disposing of way too much garbage or not. But if we're not, if it's the exact same as another community, the same size or relative numbers, it would help me. So I was wondering if that information could be pushed on to, it doesn't do anything to the financial side of it, but it does help me in looking at my areas.
We could, I think, I don't know if there's any way to really break that down, Mary Kay, is there? I mean, if we could look at what we had for prior.
What I could do is I could provide population bases, I guess. I'm not sure if I would want to include that on this particular spreadsheet, but
no, that's fine.
I could definitely provide the information so that you could do a quick calculation if that would
be great.
Yep. Yeah, not a problem.
Garbage is a hot topic for me right now.
Okay.
Any additional discussion items or questions for John or Mary Kay?
I got one more, is that I was wondering, I talked to John about this before, this whole, giving money for this service is kind of new to our area. And as a rural kind of area rather than an urban area, we would like to have a way of sending in, kind of like a report card, or how do we feel things are going in our area for tourism or whatever have you. Again, not going on the financial side, but if it comes to a committee, they should know how they're doing, I would assume.
Mr. Chair, if I could respond.
Please.
So Director Nicklin, yeah, so on that, we had that conversation around, I think primarily around economic development. And I have raised that issue with Ignite at possibly looking at a scorecard model and what that could look like as well.
Okay.
So there is some consideration being given to that at this time. And we'll just keep an eye to it over the next little while to see what's happening. They're having their AGM on the 26th. I hope everyone received an invite to that. It's from 10 until noon at Planet Hatch. And anyway, it's they'll also be like any annual general meeting, they'll be announcing their new board and promoting the region and promoting the area in terms of that. So.
Okay, thank you.
Any further questions?
I guess just, I think David has his hand up there.
Yes.
I can't see those. So. Go ahead.
No worries. Just kind of expanding on what Kevin was saying regarding a scorecard. What's also available for historical data when it comes to such things as recycling and solid waste, and what types of data can we actually create some of these benchmarks for that would be available to work off of?
If I may, Mr. Chair, we have the historical tonnage for recycle. Well, depending if you're part of the region-wide recycling program, it wouldn't be broken down by specific municipality, but we have these same spreadsheets for 10, 20 years back. So if you'd like that information, I can definitely get that to you.
That'd be greatly appreciated. Thank you.
Definitely.
And I have just one more question, I guess. We just step back for a minute with the scorecard. I know it was with the Ignite AGM. Through you, Mr. Chair, to John. Do you know if Ignite has any plans to live stream or make any part of their AGM virtual?
I do not, through you, Mr. Chair, to the director, I do not, Director Fox, but I will, I'll certainly check on that. They usually do have some form of live participation in terms of that. I know they're doing an open house in conjunction with it. So it's it could be a bit of a dog's breakfast, if you will, trying to get in a question or something in there.
Well, I mean, even if we were able to tune in and watch, and this is a bit selfish with me, but working full time and going to AGMs in the middle of the day are not conducive to getting work done.
Yeah. Understood.
Okay, so
Last comment I have is keep making money.
yes, it's a good report. If there are no further questions, a motion for adjournment would be in order.
So moved.
Seconder,
Seconded.
all in favor?
All right.
Aye.
Carried. Thank you all.
Thanks, everybody.
Hey,
Hey,
see you
everyone.
now.
Have a wonderful day. Thank you.
Bye now.
All right.